the studio with me now is independent what, I don't know, but he's independent, Craig Martin with a moustache. Give us your top picks, though. We've only got 5 minutes. Your top pick of the listed property sector on the JSE.
Okay, so that would have to be Redefine International. And the reason is because of the fantastic yield. It's got quality assets and a very interesting diversified portfolio in that half of it's retail, but in retail in places like Germany where the consumer is not under pressure, Switzerland, Netherlands, and then it's got 25% in hotel assets. But very interesting, they buy them at a good price, they upgrade the hotels, and they're on the outskirts of London. They've just bought one in Edinburgh, so they're managing to extract good yields out of that as well. So 30% growth in underlying growth in distribution, and I'm expecting between 18 and 22%, obviously depending on what the rand does as well for 2015. So you're getting a good 6.5% gross yield on that at the moment.
Craig, maybe a bit of a dent in the optimism. What about the interest rate environment? What would be the biggest headache for somebody who's highly exposed to listed property right now?
Okay, so, one's not taking a view on the South African interest rate. I'm really talking in this particular article about a lot of international players. And so in Germany, for example, you can lend at 2% if you're smart, and you can get a yield of 6.5%, 7% on the retail property. So that's a fantastic position to be in. Obviously, in time, we're expecting that perhaps interest rates will go up, but then so do rentals. Rentals escalate from year to year. So it remains a good property asset, a good property class. Of course, because you've got the hotels which escalate with demand for accommodation and so on, that makes Redefine International a specifically interesting play.
Great.
And of course, some of the other properties I spoke to are in global positions where we got a GDP far higher than in South Africa.
2 questions from my side. What the other 4 picks? But on the pure South African players, are the initial yields high enough to warrant a big investment?
Well, there isn't that 2% gap between bond yields and property yields as you'd expect. There's a question around the consumer being under pressure for those that own retail stocks, and so my focus has really been in terms of the international play. And because you have a lot of property funds, some of these companies have been priced according to the attraction that they displayed, like NEPI, Into. But in my opinion, Redefine is one of those that perhaps hasn't got the same attention, and it might be because most properties already own Redefine, and they've got 30% of Redefine International within it, so they didn't want to double their exposure. So under 9 Rand, I think this one stands head and shoulders above the others in terms of yield and potential growth.
Has the REIT story benefited South Africa? Has it attracted more overseas investors? I think that was the transformation, one of the reasons for the transformation, to align ourselves with international practices. Has it worked?
Well, the REIT started in 1960 in America, and some of these funds have got their, what do they call that, listing, so the American investors can get in, but it's had no uptake. I think Redefine International was one of those that made mention of that. So I think perhaps not, but it's a good thing that we've aligned ourselves to the way international property funds worked, although there certainly are a lot of international investors in many of these funds, and many of them have got dual listings, like NEPI is listed in Bermuda and on the AIM and so on. So it's attracting investment from those markets, perhaps not directly through the JSE.
A quick one from me, Craig. Looking at Delta, which is one of your picks, I see that they've got a very strong Pan-African focus. How important is that in terms of the gauging attractiveness of a listed property stock or fund?
Yeah, look, the headings may be a little bit misleading, but I'll make mention of it because it's one to watch. It's not perhaps one I'd go into right now because it's very much focused on Mozambique, most of its assets in Maputo and Morocco, and the growth is intended to be in Zambia, Ghana, and so on. So going forward, it's a company that has some capital, and it's a Pan-African story. So there may be potential if you're looking to have exposure to those companies which have 6.5%, 7% GDP growth as opposed to our benign growth here.
Okay, so the final point is that you prefer the overseas exposure. I mean, you can get capital counties and Into which have overseas exposure as well as Redefine. Yeah. Would you take all of those 3 above a pure domestic exposure?
Well, I mentioned Intio as well, which is the 16 biggest UK property stocks, and some like that. But I certainly rather look at that than in terms of some of our local players because of the concerns around the retail interest rate cycle, etc.
Craig, thanks so much for your time.